Bitch, Draco.
What's good? Who is this? Bitch, that's my phone.
It's Bryce.
Bet, what's good, bro?
What's good, nigga?
Shit, you the only niggas in here right now.
Nah, Ahmad just joined. I was on the phone with this nigga. He told me he was having a teaching.
Yeah, but I ain't gonna lie. If you got no idea what we talking about, this probably ain't gonna be too helpful if you ain't watched none of the videos yet.
Nah, I'm not gonna lie. Like, I'm gonna be working like here in a sec, anyways. So
Yeah, in the
I'm
back.
just gonna like, hey, y'all just niggas just, yeah, no, y'all niggas just gonna be on in the background. I don't know. Maybe I'll pick up on like 5% of the information y'all are saying.
For sure.
Kyrie just texted Bryce. Kyrie not pulling up.
Yeah, bet. Yeah, nah, I'm recording.
That nigga not trying to be great.
I'll be right back. I'm gonna go plug my phone in real quick, and then we start.
My man, niggas should use the bread from just to buy an island.
Bro. What up, Todd?
All right, yo, everybody can hear me?
Yeah.
Yo,
Yes, sir.
So I was just watching the I think what we'll do for real is every day we'll just go through like a episode of the mentorship. I was watching the second video back again today, and basically what he was talking about, let me get rid of this. So just obviously, well, it's not Sunday, but on Sunday, you would want to look, okay, we want to look at our weekly chart. And before this weekly candle, I mean, this was just these past 2 days, but just looking at, let me see if I could like do a horizontal. So if you, that's the wrong shit. We need a vertical line. So if you're just looking at from this line and back, and obviously, like I said, this was, we were talking about this yesterday, how we took out the all-time highs here. What just, so say it's Sunday, we haven't seen this candle open yet. Where would you guys expect price to go?
Oh.
Down.
Shit.
Wait,
like you saying this week, today, or like in the next?
So I'm saying if you're looking at this candlestick, this hasn't even formed yet. This is the weekend. Where yeah.
Oh yeah, down. The
Yep,
next candlestick, yeah, down.
because we're looking at the weekly chart, liquidity, and then if you look at this was no, that wasn't even the hold on, let me zoom all the way out. No, yeah. So before these highs, this was the most recent high. So we ripped through that shit. You see, was from the fucking 2021 right there. So that was 3 years ago. It took us to rip that bitch out. So, anyways, like I said, so going into the week, like I said, we were already talking about it yesterday. We weren't even looking on the weekly chart, but we were already bearish. So that sets our like I said, so we're just, what is likely? Are we likely gonna go higher or lower? Lower. And then, so we want to drop down onto the daily chart like we did yesterday. And okay. And now we try to figure out where in that weekly range we are on the daily. So Kyrik's not here, but me and Kyrik were talking about this fair value gap. And I want to say, Ramad, weren't you pointing out these lows here?
Yeah.
Yeah, so in this term here, so like I said, I'm still ultimately bearish because we have to, this gap hasn't been filled in yet. Do y'all understand how it hasn't been filled in yet?
Must be talking about
Um,
how it need to be two full
Uh-huh. Yep.
candles there.
Yep, exactly. So what I'm seeing here, this is on the daily chart forming. Obviously, we got this fair value gap. So there's a few different things that I could see happening here where we trade back up into this fair value gap to get some liquidity to finish the move lower, or we get a bounce and we completely fill this gap. But like I said, it's kind of just reacting and seeing what happens. But this is very normal to see this happen where we take out the lows and it's in a fair value gap to see a short-term rally higher. So now I'm gonna go into the 4-hour. Let me just hop straight into today's opportunities. So this gap here, oh no, that's the daily gap. Need to get this off. Okay, so there was a gap that you really could have played all day today. Right here. And so we're on the 5-minute chart. So there's a 5-minute gap. And what time is this low? So this is Monday's low. So say I'm looking at this, like, well, I guess that's pre 6 a.m. But depending on what time you would get on the charts, this is how you would frame the market. Or if you're just looking at it at this time, this is what I would be looking at. And as you can see here, price drops down. We take out Monday's low with displacement on both sides. We got displacement here, displacement here. And obviously we have the fair value gap. Do y'all see the short term, the swing high before we take out the swing low? There's actually two of them, but the closer one.
It's like, why is it one? It's a swing high. It's a blue candle. I guess like one high behind the displacement.
Behind is this one?
I'm talking about that one, yeah.
Yeah, so this was the other. I do see this, but I also see this right here. Swing high. You see that?
I got you, yeah.
Yeah, so either or, really. So, okay, we have the gap. We trade above both of the ones that you could use this. I'll show. I'll draw the one out. Do both of the Ramad, do you see what I'm talking about? Here's the market structure shift. Market structure shift. So,
yeah, my fault. I was trying to switch to my computer so I could see the whole shit like better.
you good. Okay, so yeah, market
So,
structure shift. You could have used this swing or that swing, honestly. These are both.
so we see the range. My fault. So we see the range. And then your question was, do you see where we break where we
Just the market structure. Did you see the market structure shift, the swing high before we took out the liquidity?
Yeah. So the verbiage you used was, did you see the swing high before we took out the market liquidity? All right.
Yeah. And then it would be opposite. If it was we're going to buy side, it would be a swing low. I'll be looking for. So just this flipped. So this is our market structure shift. So okay, price trades to and through that market structure shift. Keep going, keep going. Comes back to the fair value gap, and then you could have put your stop loss here. You could have either put your stop loss here, or you could have put it all the way down here. And you just would have targeted. Obviously, they already took out these highs. I would have just targeted right above these equal highs. Cause I think I was talking about it yesterday. Like whenever you see shit like this that's too perfect, just know that the market it created that so it could rip through it.
Yeah, and come back down, right?
Uh-huh.
All
So
right.
as you could see, let's see what this. Not sure. You would have just answered. So on the 5 minute, because it's a bigger gap, you can give yourself like, you know what, I'm not gonna enter until it hits the midpoint. You could really enter in all of this area. Obviously, if you would have had it down here, you wouldn't have got filled in, but I'm just gonna go for the 0.5 level of to give you some it offers you a better risk to reward. So with the biggest stop in this trade, this was a 2.6 risk to reward. So you were risking 35 points for 90. And so if you were in one mini, which is pretty big, like I said, when you guys first start out, you guys won't be trading this, but this is almost a $2,000 trade, risking 700. So like I said, close to a 3R. If you were using half that, 5 micros, it would be you're risking $345 to make 900. And let's see how long this trade took. So if you would have entered at 9:45, you could have closed at 10:20. You just made 2 bands in 35 minutes. And you really wasn't doing shit besides just finding it, seeing this. This was a pretty easy setup today. And as you could see, this fair value gap was money all day today. And I honestly think I don't think I know that price is drawing back. Why is price gonna come back to this fair value gap? Why do you guys think?
Is one of the reasons because what you talking about, how it could be too perfect and it's gonna come back down?
We got it. Yep, that's one. We got all these lows, all these wicks. And what's another reason?
Our bias.
Say that one more time.
Our bias.
Yep.
For the day, like our daily bias.
True bias. But on even just the fact that, like I said, this fair value gap hasn't been delivered yet. We haven't even put one regular candlestick in this. You see, like
Right,
it's
yeah,
all
okay,
wick.
okay.
It's all wick. So like that don't even mean like, yeah, it's still got to put a solid body, bearish and bullish through. So I want to say maybe London session, or like I said, price is definitely going to return here, especially with all these wicks, these equal lows. But this is kind of just a little kind of off topic right here, but just because I'm seeing price, I want to say the market open back up a couple hours, or it opened up right here. As you can see, we had a little gap up, but do you see where price is looking like it's probably going to reverse here in this fair value gap? And just using the Fibonacci in the range that we're in, this right here would be a good trade op. It would be a smart trade to short in this fair value gap because we're in that golden pocket. We're premium, so we're above the equilibrium, and there's a fair value gap that is still fresh. There's still a lot of liquidity in there. Make sense? And yeah, so, and then you could short and target here. You could target these equal lows. Honestly, I think I see this pretty much happens every day. Remember how I was telling you guys about the new week opening gap?
Yeah.
So that same shit happens on like the daily opening gap. So as you can see here, we like barely wicked into that opening gap, but we still there's still space in there. You know what I'm saying? And it was just a wick. We have to come. The market needs to deliver that to be efficient.
So it has to hit back in there, as you saying?
This motherfucker dumping as I'm saying that shit is
Yeah.
Yeah. So yeah, like I said, this wouldn't be because of the time of day, you wouldn't want to take that trade. But if you see this during a kill zone 10 to 11, 1:30 to 4, that would be a high probability trade. Let me put in and we could talk about the trades that I took today in a second. So this right here, look, I took this trade right here, keying this fair value gap. So let me just zoom out. Man. So as you can see here, or just looking at this, how would you guys do the Fibonacci in looking at this? How would y'all do the Fibonacci from which high to which low?
My initial thought is just the highest high, the lowest low. If it's different, well, yeah, I wouldn't know.
Type. So yeah, that is, you can do that, but how I like to do it, like I said, that works. Like I would do this, and then after we broke out of that range, then I would do it like this. This is our new low here.
Gotcha. Okay. So like the most recent high, most recent low type thing?
Really just like, do you see how this move is like so like, it's just like, what's the word? It's just like aggressive. From the high to the low, it's like, I'm struggling trying to find the word to use, but like you see how that's like, it's clear. The high and the low, like that was a fast move. Yeah.
For sure.
So that's our range. And like I said, I did the Fibonacci like that. So let me do it like this. So you get the Fibonacci on the other side. So bam, as you could see here, like I said, I was ultimately, I am bearish on the weekly, daily. I think the price is gonna go down, but all these fair value gaps up here, like I said, like prices, whenever it leaves liquidity, equal highs, hella fair value gaps, like it's leaving them for a reason. So I'm expecting that price is gonna retrace up a little bit before we go down. If you've seen, I explained it on my Instagram, my process for the trade. But so I looked at this fair value gap. Obviously, we have a big fair value gap with displacement. And I was also looking at this gap too. Before the fact, obviously it gets invalidated, but you could see it gets invalidated, but this was, for this run higher, this was the internal liquidity. Like I said, we never took out the low, but we didn't need to because there is all this liquidity in this fair value gap. Does that make sense?
Yeah.
Wait, it gets invalidated. Why? How?
So this fair value gap gets invalidated because we like, it doesn't respect it. Price doesn't respect it. You see, like this.
Oh, because it runs all the way
Yeah.
through that bit.
Yeah. Uh-huh.
Okay.
Yep. No, you're good. Yeah, no, ask all the questions you need. So like I said, so it's respecting it here. And like I said, honestly, this could have been a trade opportunity, but I wasn't even on the charts at this time. But like I said, this would have been a good trade opportunity because we're in a discount, we're below equilibrium, and fair value gap, there's just plenty of reasons to go long there. So like I said, my trade, we dive in, we take out this liquidity, equal lows, and a fair value gap. That's like double whammy. You know it's liquidity in that motherfucker. Obviously, the market is drawing here. Bam. So we come here again. I want to say this is just like a tick above. There used to be like some settings that would, whatever it is, as you can see, we're not trading to this low. We got all the liquidity we needed. And as you can see, displacement here, and then we have our gap. And so I waited for the price to trade above this because in the little range that we were in, I considered this the market structure shift. this isn't exactly the like I said, it's not taking out external liquidity, so it's not the exact model. But like I said, this is kind of my own spin on it. And I waited for us to trade above here. And then I entered on this or that, and I just targeted just above the 0.5, which was right here. Like I said, I didn't want to get greedy. I could have targeted the last fair. Did it tap the last fair value gap? Let me see. Now, like, see, how sick would you have been if you was targeting that and it traded right? Like,
Yeah.
it's sick as hell. So like I said, I just took my right above the equilibrium and I put my stop loss here. So this was I want to say it was about a 3 risk to reward trade. Exactly. I was risking, wait. Yeah, so risking about 300 to make 800, just below 3R. Not much heat. Like as you could see, it barely, like that was my entry in the gap and it never really traded deep into the gap. But I forget if it's the third or fourth episode, how ICT, he was going long and like it would be normal for, not normal, but I wouldn't have been surprised if I got stopped out here and price still went in my direction type shit. Like that happens all the time. So yeah, you just would have, I put my stop loss here. If you, what am I saying? When you're just getting started out, you're probably going to want to have the widest stop loss possible. So like I said, you just probably you could have it here at the beginning of the fair value gap, or you could put it all here or here. Like I said, obviously this is the safest bet down here. You're allowing yourself the most amount of retracement. But yeah, so and you would definitely want to be using micros because this is a 87 to 47 to 47. That's a 40-point range. So with a micro, with one mini, that's $800. With one micro, that would be $80. So, and a micro is 1/10. I think I said that yesterday. So yeah. Oh, and we could talk about, remember how we were talking about how like you would the percents and like how you would do your stop loss. So like for this trade, say I only want to risk $100 and no, I'll say $200. So I would just figure out where I'm going to put my stop loss. And you know what? I'm going to say horizontal array. I'm going to put my stop loss all the way down here just to be safe. I'm going to enter here. So what is that? This is 54 to 87. 54 to 87. That is like 35. 35. And then, so basically all you have to do is divide 200 by 35 because that is your risk. 35 is the amount of points. And then that's going to give you the amount of contracts to you, or not. It's not going to give you amount. You're going to have to divide that by 2 because the micros are $2 each. So let me do that now. 200. It's like 6 something, or yeah, it's like 6. So I would use 3 micros, and so a 35-point stop loss, 35 times 6. What is that? 200-ish. Do you understand how I did that or no?
So you said divide the points by what?
So
Yeah, run that back.
you have $200. That is my risk. So I have let's say I have a 20K account. I'm risking 1%. That's $200. My stop loss for this trade would be 35 points from here to here, right?
Yeah.
And so now I divide 200 by 35, and that gives me, I don't have my phone, so I can't do quick math, but like I said, it's about like 6 something. It's six. What is 6 times 5? It's like it's 210. It equals 210. So each micro is $2. So you would have to divide that by 2, and then you would use 3 micros. So 3 micros is $6 per tick. 6 times 35, like we said, 210. Does that make sense?
I understand. I don't know mess up the group because I just think that no matter how you explain it, for me at least right now, I don't think I'm gonna understand it. I understand the math, but I just don't really understand because there's still things I really don't understand. So
Yeah, for sure. Yeah, that
to answer your question, like yeah, like I hear you, but I just don't think I can apply it. Like really, like, it don't really
because it
make
is
sense.
like you have to do it fast type shit. Like I'm saying, you're doing this as the market is moving. So yeah, but I would say always when you're trading, it's always better, especially when to go a smaller size than bigger size type shit.
As far as the stop loss, right? As you saying?
Stop loss and just the position size. Like I said, you would rather trade like one just when you first start. I would say trade 1 micro for real, because as you could see, like this bitch will move. How many points was this? 55 to, and this wasn't even a news candle or anything, but this was a 35-point candle in 1 minute. So if you had 1 mini and you were in long, you lost $700 in 1 minute. Right there.
Hey, I kind of got a backtrack question.
Yeah, no.
I just pulled up my chart from today, and I had my buy side liquidity a little bit higher, and I was wondering how I even got that shit. Like now I'm looking back at the chart, and I don't even know. Like my buy side liquidity line is like
Can you
higher
share
than.
screen? Can you share your screen?
Yeah.
Oh God, yeah.
Post disabled participant screen.
Yeah.
But like I'm looking back, and it's these 2 points at 7:53. I guess that's pretty too soon. That's not far enough back. I guess 8:45. I don't know why I did that actually. 4:11 though, it's lower.
So hold on. Yeah, I don't know what I'm not very familiar with Zoom. I ain't gonna lie. But tell me where you marked your liquidity, and I'll just mark it out like how you did.
I marked it at 9:18. 17:9:18. Oh, you mean the time? My fault.
Yeah.
7:54.
7:54.
Yeah, those two high. Pretty much.
Okay, yeah. So I see that. And you went at what time of the day did you mark that out?
I probably marked it a little bit after we were driving to the workout at 9. Shit. I probably marked it as it was. Wait, this is New York time? Okay. I probably was like an hour late.
Type. So this was at like around this time?
Yeah.
Bet. So no, that's right. Like that's in this range, that is clearly, I mean, you could see here, we created the equal highs. I mean, you had the right.
Yeah.
That was the right. Yeah, no, that was the right buy side on God, like for the time. And then buy side went here. And then we took buy side out. And then we created all these highs. So this is basically ICT talks about it. And well, we traded up all the way up into this fair value gap. So it's like we didn't even need to take out the high because we had the liquidity in here. It hadn't even got all the liquidity from this. We traded up.
Oh. And nigga, you're changing this shit. Right, like as the day is going. Like
yeah.
Like you just said, like, oh, it started there.
Because once it takes it out, it's no longer, it's like the liquidity already got taken. Yeah.
Okay.
Yeah, You're like moving, like, yeah. God. So, as I say here, we had these equal highs. This was not displacement. Like, why did price trade above? So that it could rip through that shit later. So what happens? We open up at 9:30. What time is it? 9:30, chop. We trade into this 5-minute fair value gap, fresh liquidity. We take out those highs from literally, like I said, when you see shit like this,
like the equal highs, right?
Yeah, when you see equal highs, you should be licking your chops. Like, okay, I see these equal highs, And there's this 5-minute fair value gap that we haven't traded down to. So you damn near this morning. So did you see on my Instagram, I said turtle soup. So just using the Fibonacci. Okay, let me explain why I would go short right here. Weekly bearish, daily bearish. On the Fibonacci, if I just do the Fibonacci like this, I mean, I don't even need to do the you could tell we're in a premium from the low to the high. Equilibrium is probably about right here. We're in a premium like a motherfucker. Price is expensive and we're already bearish. So literally you could just put a limit order to where as soon as price trades to this high, I'm going short. And like I said, so pre-market, market didn't even open yet. You could have took shorts just to the 5-minute gap. And then we trade to the 5-minute gap. We create a swing low. We got the pattern. The middle candle is the lowest. The two on the right are higher. And it runs. Let me see if there would have been an opportunity. So technically there would have been a like a 2022 model. The risk to reward is not great, but I do see it. So this would be your market structure shift. Does that make sense to y'all?
Yeah.
Yep. Swing high.
High.
Lower high, higher high, lower high.
Yeah.
It doesn't look, like I said, it don't look good, but that's what you're looking for. So as soon as we trade above this, then ultimately you would want to see it. Best case scenario, we trade here. But this gap could have took this entry too. But remember, I was telling you guys yesterday, your stop, you could enter here, but your stop loss has to allow the trade to come back down here. So let's see. You would have just took this entry. It's not good risk to reward, but let's see. Yeah, that's negative risk to reward. It's not a good trade, but the what's the word? The concept is there. Displacement on both ends, market structure shift, return to a fair value gap, take out buy side. Do you guys see it? Like I said, it's not the risk to reward. I wouldn't have taken the trade. I would have liked to take the trade here, but fast forward, and what the fuck does price do? We come back to that gap. Like I said, and on top of that, it's this 5-minute gap. Like I said, it wouldn't have been a bad idea to buy again here. And like I said, a conservative target would be this fair value gap right here. Y'all see that?
Yeah.
Yeah.
Conservative target, and we got all these wicks, equal highs. There's something important here. And as you could see, we did have a reaction here. Like it almost acted like it was gonna break down. Do y'all see that?
Yeah.
Like wicks. Like if you see these wicks, you might be like, oh damn, like I don't know. But like what happened over here, the market is like, whenever you're trying to make easy money, like I'm sure people here, they were trying to buy. They're like, oh, it's only 15 points away. Like I know we gonna take out these highs, and look what the fuck happened. Like whenever you're trying to make easy money, just know the market gonna make your ass pay. And like I said, so why did we create all these equal highs? So we could rip through them motherfuckers like
Yeah.
And I forget what episode it is, but ICT talks about it. There's an algorithm at 1:30. You want to look back. So look back to the most significant swing low post one, depending on if you're bearish or bullish, you'd be looking for a high or low. As you could see, we you could look at this low. Obviously, if it's this time, you could look at these lows, but I would look all the way back here because that's the range that we're in. And like I said, if I'm going to be buying in a bearish market, we have to be deep premium, like type shit. So this, I'm not fucking with that. No, I'm looking all the way back to this low from this morning. We take out that low, we stop rate, we get the liquidity, and we take out those highs. Literally, not immediately, but you would have still been protected with your stop loss. You wouldn't even have been, you would have never even went into drawdown. It never came back into the fair value gap. But let's hop into. So yeah, this, like I said, this was the trade that I took. I bought here, but there's so many. Like I said, if you are in tune with the bias, Fibonacci, the range that we're trading in and where it's drawing, like I said, you can't really go wrong with these concepts. So yeah, you see, we traded back where I said we were gonna trade back to.
Mhm.
This is where this is literally, we're on the 1 minute now, so you could see it better. But remember, so this was what I was telling you about with the new week opening gap. Like this is literally probably one of my favorite trades. The return back to the new week opening gap, because I mean, just like you see here, and so for a second, honestly, so this is an efficiently delivered gap. You see it? Full.
Mhm. 2 candles through it.
Mm-hmm.
Wait, so wait, we said 2 candles fully through it, or like could 1 candle make it fully delivered?
I want to say it's both like up and down. Well, in the video I watched from ICT, yeah, it's both ways. It can't just be
Both are.
solid, yeah. But I will say, like, say you're in a like with the concept, the trade, you're in the 2022 model with the fair value gap. If you're in, like, say you wanted to enter in a fair value gap and you see price put a big ass, like a solid candle through your trade, and your stop loss is at the bottom, like you put, I'll just show you. Say it didn't happen today, but I'm gonna just be like hypothetical. So say you were in this trade, like the trade that I was in earlier. Say that I'm here. If I see the price put a body, like a bit, this candlestick, say it puts the whole body through, instead of just wicking, it puts them. You can close your trade early. I would close my trade early if I seen it put all the way through the fair value gap. Be like, okay, I accept, like, but that's just time in the market. Like I said, you see that so many times where, okay, my stop loss is probably gonna hit. I might as well save $200, $300. Does that make sense?
Yeah.
That's what, if you see that, like where price is like violating your, where I say it's violating the fair value gap, it's like acting like that bitch is not even there. Like we're respecting this fair value gap, respecting this fair value gap, respecting this gap here. Trying to find an instance where it just absolutely,
Like a full candle just all the way through
yeah.
it.
There will be, I want to say that, like I said, today was a very clean, like nothing too crazy, not crazy volatile. That usually happens on news days where there's a lot of like manipulation and shit, a lot of like external shit going on. So yeah, and ICT talks about it when on days when there's a lot of news, and it's fucking ICT, the nigga that we're learning from. Like, if that nigga says he's not trading, we probably shouldn't be trading. So like I said, it's all about the high probability trades, high probability setup. Do y'all have any questions?
Yeah, I feel like uh, I
You
was just gonna say, similar to what I said earlier, a little bit like I gotta keep. I'm not gonna waste the time and energy because like I know I need to keep cleaning up on some things before I can even fathom the answer. Like I can hear the answer and recite it back, but I don't
Yeah.
really understand the shit. You know what I'm saying?
Right, yeah.
So one question I do have though is cleaning up kind of that checklist for just base setup. you said, so today, like main points, starting it off, we went from, in terms of steps, we went from weekly, get a weekly bias,
Mm-hmm.
drop down to our daily, see our daily highs and or lows, and then drop down to our 5 minute, and we were looking for market structure shift. So
I kind of, what's the name? I honestly dropped down to the 5 fast just because I like to get on. But ICT, you would go daily, hourly to 5, 15, 5. But